Hi everyone, and welcome back to another simple daily practice drill that I think you can use to become a better day trader. And this one is called higher time frame, lower time frame. So let's go and take a look. So this is going to be the first of two videos on this concept. Now, these drills were really important in improving my own read of price action, which is foundational to trading better. So let's get into the instructions. Well, the instructions are really simple. Instead of having one chart on your screen, you're going to always have two charts, one higher time frame, one lower time frame. And I suggest that the difference is about 3 or 4x. So if you've got a 15-minute chart, then you can have your 5-minute. If you've got a 60-minute chart, you can have a 15-minute, etc. Now, I got the idea from this drill from Dr. Al Brooks from the Brooks Trading course. And most people who watch my videos are familiar with Dr. Al Brooks. And if you're not, I'll put a link to his course below, because if you like trading and you want to improve your trading, then I highly recommend this course. And I'm going to show you a slide from Dr. Brooks's course, which gave me this idea. And let's check that out now. So this is one of his slides in his course. And he's talking about different kinds of bull trends. Firstly, the bull breakout, a micro channel, small pullback, then the bull channel, a broad bull channel, and then a trading range. And I got the idea from this drill from this little quote here. This is a bull breakout on a higher time frame. Now, for those of you who are not familiar with this, you're welcome to pause the video and take a read. But I'm going to assume everyone else is pretty familiar with how to trade these 6 different types of structures. So the text there, that a micro channel is a bull breakout on a higher time frame, it got me thinking. We usually think of trends in terms of being very strong to very weak. It goes vertical as a breakout, micro channel, more pullback, bull channel, then it becomes a bit broad, and now we're sideways in a trading range. This drill goes backwards. No matter what I'm looking at on this time frame, I can just go up a time frame, and then I'll see the next stronger time frame. Let's take a look at a few examples so you can get what I mean. Let's say I'm looking at this chart and I'm trying to determine what to do on this bar. And it's a 60-minute bar, so I've got a little bit of time to work it out. And I think to myself, well, we're obviously in some kind of bear channel. We formed a bit of a wedge bear flag. We might have a wedge, 1, 2, 3. And now we're coming up to test the double top. Maybe it'll be a higher high double top, lower high double top. But I think I want to be short here. That's my feeling. But I've got this problem, and that is incredibly strong buying. This was good. This didn't go lower. Now we're right back up to the high of this bear spike, and I've got a problem here. I'm not sure what to do. Is it long? Is it short? So rather than just sitting in confusion or guessing, hesitating, what I do is I just go up one time frame. Let's take a look. So we're back on this chart, and now I can see I've got the 4-hour chart here. Now this is starting to look a little bit different. We can see this was a strong bear spike. We can see we did not get a new low here, and that's a bit of a problem. And if I tighten that up, we did get a new high, and that's a bit of a problem. For the short case, it might just be a scalp back to the moving average. It might be that this is going to be the start of a bigger move. So I can see on the 60-minute chart, I've got a bull micro channel, and on the 4-hour chart, it's a very strong bull breakout, only buy. Bull micro channel, only buy. Even if it was to collapse down a bit, pullbacks mostly stay above the high of the breakout point. Okay, so the chance of selling here, making a profit, so you got small risk, big reward, the chance of this closing that gap is really low. So instead of selling, I'm right away in a position to get long. Now, do you buy here? Do you buy later? I think this might need a second leg down. So another new high, second leg down. Okay, now we've got a strong buy signal. And so by not taking this sell, which didn't trigger you in anyway, I'm now in a position to buy for what I think is going to be the second part of this move. Now, even though on this time frame, it's taking a long time, you can see that this higher time frame move is playing out. That this strength, even though it's taking more bars, so we got the breakout that way. Okay, so let's start to make them a little bit harder. What about this chart? I think to myself, well, we've had a couple of legs up. Looks like we've got nested wedge top, 3 pushes, 3 pushes. We've been going sideways in a trading range, and now we've got this failed breakout above. And I'm thinking to myself, yeah, I think I want to be short for it to go down. Now it's a trading range, so it's probably a buy low, sell high situation. But I'm thinking, yeah, this is the end of the spike and channel. And my target's going to be the channel line, the low of that pullback, spike channel, and we're going down there. So I go up a time frame. So now I've gone up a time frame. Now it's a little bit more confusing because it's like, well, that is a short, but it's a short right on the moving average in a bull channel. We've been above the moving average for a long time in here. This is probably not the place I want to sell. Okay, so I can't sell there anymore. Now, maybe these sell signals worked. The question is, what's going to be the next move? All of a sudden, now I can see I'm in a bull channel. So I thought I was in a broad channel before, or maybe a trading range and I was breaking down, but then I look up and see, no, we're in a bull channel. We keep coming back to the moving average. So instead of looking to sell down here, it might be the case that there are traders buying. And I'm going to wait and see what traders do. We can see there were way more buyers there. Now I've got a bull bar above the moving average in a bull channel. Now it's an inside bar. I probably don't want to buy that, but I can look to start to buy the next bar, bull bar closing on its high near the moving average. Now I'm really glad I didn't sell down here. I went up a time frame, was like, yeah, actually, that's not the place to be selling. And now that there's bull bars here, I probably don't want to be selling up there either. Now I've got a bull bar closing on its high. Now it's a buy signal. So there are two examples of how you can use this technique, and I really encourage you to practice this. In fact, this is one drill that I do every single day. Today's a Saturday morning. I did it this morning. Tomorrow's Sunday. I'll do it then. Even if I don't have market data from the night before, I'll just pick another instrument I haven't looked at just to keep this drill sharp. And what you're going to find is that either what you're looking at is kind of clear, so you've got an idea of what the probabilities are, or it's unclear and you go up a time frame and then you've got the probabilities for that structure. Now, of course, if you go up a time frame, you're going to have to change your trading size. Your stops are going to be much further away. Your targets are going to be different. That's how we're going to get more comfortable with what's playing out. And so we've got a better idea of the signal bars that we're looking for a trade in that direction. Well, thanks very much for watching. This is the first video on higher time frames and lower time frames. And I'm going to film a second one where I'm going to show you the practice that I did this morning. And so that's another drill that you can copy. So I'll see you in the next video. Thanks very much for watching. My name is Tim Fairweather from Zen Trading Tech.